Hey folks, welcome to today's Steady Trader YouTube Live. The stock market has been on a fairly wild ride over the past 6 or so trading days. In fact, the S&P 500, the futures contract, just listen to this, the futures contract erased 4 months worth of gains. 4 months in 6 days. There's an old saying in Wall Street, or at least I'm going to rename it, and it's called "From slow moves come fast moves." And so the question begs, why do markets correct? Note I'm not talking about bear markets. Why do we have bear markets? I'm talking about why do we have corrections in the market? And the reason is actually quite simple. It's just buyers get exhausted. So from slow moves comes fast moves. What does that mean? Let me show you guys a very simple chart here that's going to put this into perspective and to tell you why we did not buy stocks or load up on stocks in the second half of January and why it's not surprising I've seen this pullback. So let me show you guys this in real time. Let me just flip this around. Here you go. And here we are. All right, this is the chart of the S&P 500. One of the core things, and we just finished off our Tuesday call with Clubhouse members, one of the core things I always talk about and I caution against is when we have steep moves. Okay, that's a steep move, and it leads to a vertical move. You see that? Steep to vertical. So we had a very steep rally throughout the, let's call it after the first quarter of 2016, all the way through 2017, and then a vertical blow off. Again, now let's look at this. Why do slow moves lead to fast moves? You can see there's a continuous steepening of the curve. You don't need 1,000 economic indicators for this. All you need to see is this visually. And you can see that as we finished off the year 2017, we kind of reached the upper end of the already steep move, and then we went vertical. This is the move that happened through most of January. In fact, we closed January right here, like where my hand is, where that little cursor hand is, right here. That's where we closed January. So you can see it visibly. You don't need to be a genius. You can see that this is a very steep move. Now, it's also a slow move. If you look at that move in January, you can see it was a very slow move. It was very slow and methodical and really came on no volatility. And then you get a fast move. All right. This is what you call when buyers get exhausted. Buyers get exhausted right here. Okay. When do you know that? You know that at the latest at this point right here. The first real meaningful washout is when we break things off. And usually, and this is a pretty good thing to know, usually what happens is that the big move higher like this tends to get erased, right? So the steepest part tends to get erased, and that's what we just did. So in 6 days, in 6 trading days, we just erased 4 months worth of trading. If this were the future contract, you would see that all the way since October 2017, we erased this entire rally because the futures contract actually traded a little bit lower today than the cash contract. So just wanted to give you guys a little bit of perspective. I hope this is helpful and tells you why sometimes we just get exhausted. It doesn't have to be a whole lot of reasons for it. A lot of people in the media right now are trying to make out the case for all sorts of economic indicators. The reality was that yes, interest rates rallied, and that's ultimately what sort of is the explanation of why we're selling off. Is that people are scared of inflation. But through the lens of technical analysis, you can see that this very much fits the bill of a slow move having to lead to a fast move. Is the sell-off over? I'm sure a lot of you guys are asking about. I don't think it's over just yet. I think we have a more volatile 2018, certainly than what we saw in 2017. For right now, the one thing I want you to take away from this video, if you could, is to not chase when a chart, doesn't matter what the chart, could be the greatest chart in the world, don't chase it when it goes vertical. It's always a better buying opportunity. In case the S&P right now, it's about 6 or 7 or so % lower at this point. Hope this makes sense, folks, and I'll see you in the next YouTube Live.